Hey guys, hope you are doing well today. Today is Wednesday, September 21st, and it's Fed Day. That means that the Fed is meeting today and they are gonna raise interest rates yet again. So here we go, guys. We've got a lot to talk about in this video about interest rates. And then on Monday, we got new information out on home builder sentiment. What does that look like, and where does the whole new construction arena look like going forward? And then lastly, I want to share some local data here in Charlotte and talk to you about what's going on with median home prices, as well as new listings right here in Charlotte. So don't go anywhere. We're going to get this video cranked up for you right now. Welcome back to the channel. If you are new here and we have not met yet, my name is Brian Taylor and I'm the owner of Dreamline Realty right here in Charlotte, North Carolina. For you viewers that are coming back to the channel, thank you so much for tuning in and supporting the channel here along the way and the great things that we're doing here at Dreamline Realty. For you new viewers, I highly encourage you to subscribe to the channel. We are in some very, very tricky times right now in the real estate market, and things are going to continue to get trickier as we go through the next 6 months, 12 months, or 18 months. Guys, that's really important for you to keep up to speed on what's going on here in Charlotte. So hit that subscribe button below, tap on the bell for notifications. That way you're always in the know on any new videos that I put out every week. So guys, today we're gonna talk about new home builder sentiment, interest rates, and some local Charlotte data. So I wanna jump right into the video and share this article with you that came out on Monday from CNBC. Okay, so the article headlines, it says, more home builders lower prices as sentiment falls for the 9th straight month. It says more builders are lowering prices for homes as their confidence in the market continues to tumble. Home builder sentiment in September fell 3 points to 46 in the National Association of Home Builders / Wells Fargo Housing Index. Anything below 50 is considered negative. This is the 9th straight month of declines and the lowest level since May of 2014, with the exception of a short-lived drop at the start of the coronavirus pandemic in 2020. Sentiment was at 83 in January of this year when interest rates were about half of what they are now. It goes on to say buyer traffic is weak in many markets as more consumers remain on the sidelines due to higher mortgage rates and home prices that are putting a new home purchase out of financial reach for many households, said Chairman Jerry Conter, a home builder and developer from Savannah, Georgia. Nearly a quarter of home builders also reported lowering home prices, up from 19% in August, Conter added. So guys, yeah, we're seeing it around here in Charlotte. Of course, this is all over the national news, right? Like home builder sentiment is falling. In the Charlotte area, though, I will have to say, home builders are still getting some traffic into their model homes, but it was nothing like it was 10 weeks ago, right? Like we've been out in the neighborhoods over the last few weeks with some clients, and it's been still fairly busy out there, but it was definitely not the rampage that it's been in the past. But once again, these numbers that we're looking at are all over the nation. So, you know, when we look at Charlotte compared to lots of other parts of the country, it's still fairly active, but it's definitely noticeable when you're out there in these neighborhoods. And guys, these builders are doing everything they possibly can to drive traffic to these neighborhoods. So I want to continue on this topic and go to another article with you right now and talk about what the interest rates are appearing to possibly do, not today, but down maybe in November, and what some people are thinking that rate hikes might look like as we go into the remaining part of this year surrounding new construction. So let's check this out. Okay, it says, from Markets Insider, the Fed may raise rates by less than expected in November as the housing market is in a deep recession. The Federal Reserve may deliver a smaller rate hike than investors anticipate in November as policymakers consider a pullback that's sweeping through the U.S. housing market, according to Pantheon Macroeconomics. Markets currently price in an 80% chance of another basis point hike in November, but we think 50 basis points is more likely the case. And the perilous state of the housing market is a key factor in our forecast, says Ian Shepherdson, chief economist at Pantheon Macroeconomics. Goes on to say housing and related activity account for less than 10% of gross domestic product, so the sector can roll over without necessarily triggering a wider economic recession, the economist wrote. Still, the housing market is in a deep recession and the pain will spread beyond home builders, soon to depress housing-related retail sales, he warned. The longer and deeper the housing recession becomes, though, the greater the pressure it will exert on the Fed to dial back the pace of tightening, said Shepherdson. Okay guys, so there you go. Everyone pretty much knows that today we're going to get a 75-point basis hike to the Fed funds rate. But looking into the next Fed meeting in November, some people are thinking that the Fed is actually going to back off just a little bit and only give us a 0.5% or 50 basis point hike in November. Now, I want to show you what's going on right now. Over the last week, interest rates have skyrocketed. Let's just be clear. They have skyrocketed. And I want you to look at this chart right here. As of today, interest rates sit on a 30-year fixed at 6.47%. Now, one thing I want to tell you, that 6.47% is if you have a 780 credit score, you're putting down 20%, everything with your file is perfect, right? If you go in to make an application for a mortgage and you have a 680 credit score and you're only putting down 5%, guys, I hate to tell you, but you are probably going to be knocking on the door of a high 6 to maybe even a 7% interest rate. So the Fed hiking these rates, guys, is spooking the markets right now, and it's driving mortgage rates higher. And I think that is what we're going to continue to see as we progress forward. Now, what I want to share with you right now, a lot of people are talking about the CPI numbers that come out every month, and really what is that and what makes up that number. So CPI stands for Consumer Price Index. And a lot of people don't really realize what is in that report that comes out every month. So I want to show you a chart here that shows you exactly what makes that up that number. So here's a look at that. So the CPI components, as you can see right here, 42.4% of that number is housing. So that is critically important. The reason that is important is because when the Fed met, if you remember this, the Fed met 2 months ago when they started ramping up the rates, and they basically said, Jerome Powell basically said, if you're a first-time home buyer, you may want to kind of wait this out because what you need right now is a reset. He basically said, we are going to raise rates and we are going to create some damage and some pain in the housing market. Now, why would he say that? Because housing makes up 42.4% of the CPI number, which is their gauge of inflation, and they know if they can create some damage and price increase with interest rates in the housing market, they're going to get their most bang for their buck by tackling the housing market first. Because if they can cause home buyers or home buyer demand to fall, interest rates to rise, slow this monster down in the housing market, they know that's their best chance of capturing a grip on this inflation. Hey, if you're getting any value out of this video, do me a huge favor. Go ahead and click on that like button. That helps YouTube know that I'm putting out good content for you guys, and it really helps me support my channel, and I really would appreciate that. So guys, I want to shift gears now and talk about some things that are happening right here locally in Charlotte. And the first thing I want to share with you is some data around median sales prices. All right, so what I'm looking at right now is sales prices in Mecklenburg County, and that is the county that Charlotte resides in. We're looking at this as a 12-week rolling average. The line in black is 2022 and the line in orange is 2021. So right now, as of 9/4/22, our median sales price, as you can see right there in that box, is $421,000. Okay, I want to go back over here and see when we peaked. And when we get to the peak right here, that is the week ending of July 10th, 2022. And at that point in time, we were at a $429,000 at median sales price. And you can see as we only go through about the last 8 weeks, we've gone from 429, as I just mentioned, down to 421. So guys, prices here in Charlotte are falling. It's so easy to see that right here in this chart. And this is showing a 17% year over year price appreciation still in the Charlotte area with prices falling. But one thing that I've always told you, I don't like looking at year over year averages. To me, that really doesn't mean a whole lot to me because I want to know what's going on right here in real time. So if we look at week over week price changes and appreciation, if we go back to where we were in July 10th, that was at a 22% year over year price appreciation. And as you can see, every single week we've pretty much gone down through here, prices are coming down, which means that prices are decreasing at a more rapid clip than what it's showing on the year over year. So I really like to look at the week over week, okay? So I want to go down here on this other chart below here. It's the same data, but it's expressed in the percentages. So again, going back here to July 10th, when we had the peak, you can see these home prices falling, and we get to a point right here where we've crossed over where we were in July of 2021. But more importantly, as you can see the tail end of this line, it is taking a sharp decrease right here. So guys, as we continue to head into the more seasonal months of the year, and as prices continue to fall because buyer demand and interest rates continue to rise, this, in my opinion, is going to come down at a pretty good pace. Where's that going to fall? I don't know yet, but we're watching this thing real closely. But it appears to me that we are heading at a pretty good downward trend here. So the next thing I want to share with you guys is what is going on here in Charlotte with new listings. Okay guys, so now let's talk about new listings in Mecklenburg County. Looking at a 4-week rolling average, we sit right here today, well not really today, but about a week and a half ago, on the 4th of September, and we had 365 new listings during that period of time. So let's go back to the peak of when we were at in June 26th, right? We had 523 listings. But as you can see right here, look at that year over year number at negative 3.9% at the very bottom. As we track from June through September, you can see how much that has fallen off. So we went from negative 3.9% year over year now to negative 20.5%. That's a pretty good number, guys. So what a lot of people are hearing out there nationally that inventory is rising. That is not happening here in Charlotte. This is evidence that that is not happening here in Charlotte. And let's take a look at the bottom of this, and I've got a couple comments to share with you. So from the percentage perspective, again, this is where we kind of hit that peak in July 3rd, 2022, minus 0.6% year over year. And again, we can see us tracking well below where we were in 2021. And now we're sitting at that minus 20.5% year over year on new listings. And we've talked about this, guys, in the past, right? Sellers right now don't have any incentive to sell their house, unless they absolutely have to move. Like, why would you trade in your 2.5% to 3% fixed rate mortgage to go buy something else and pay 6.5%? That just doesn't make sense. And at the same time, a lot of these sellers have realized they have missed the peak of the market. They're not going to get top dollar for their house. And with buyer demand softening and rates going up, houses are just simply sitting on the market a lot longer, and we're seeing a lot of price decreases right now as well. All right, guys, thank you so much for tuning in for me today. That's all I've got for you at the moment. I really appreciate you tuning into the channel. Guys, if you have not subscribed yet, go ahead and do that now and then tap on that bell for notifications. I really don't want you to miss out on any of the videos that I put out every single week. And if you want to check out the last video that I did where I'm talking about Charlotte crash or correction, you may want to check that video out now, guys. And as always, thanks for tuning in, thanks for watching, and make it a great day.